Welcome back. You're still watching Stock Watch with me, Zwelakhe Mnguni, and joining me to take your stock-related questions tonight are Zwelakhe Mnguni from Benguela Global Fund Managers and Mark Toit from Oyster Catcher Investments. Be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Thank you so much for your time, gentlemen. It's been quite interesting to see the JSE trading in the red today when we are in the territory of record highs in the US, and also we saw a sea of green there in the European markets. Zwelakhe, what do you make of this pullback that we've seen on the JSE today, considering how it fired through for the last few sessions?
Yeah, I'd probably say, Nati, it's a profit-taking move. I think we've seen prices rally quite rapidly in a short space of time. And I think that people are taking some profits and basically trying to bank those profits. So we saw that the metals and mining sector came back today after the rand pulled back above 18 again, after what I thought was a very good recovery. And the property sector, the financial sector, all the sectors that rallied when we were about to inaugurate the president have actually pulled back.
Yeah, actually, I saw that Vukile, Redefine, all down by 4%, and High Prop that was up yesterday largely was down also today by about 4-5%. This pullback that we are actually just on this GNU, because obviously all this optimism has been fueled by that, Mark, but obviously that is not the end of the road. Is any caution being priced in at any point by markets of the next stages that are coming, or are markets just operating under the umbrella of this GNU and that we will see better economic climate going forward?
Yeah, I think, I think that the political stability is really what the market is looking for now.
Okay.
And obviously, this needs to translate into better economic growth for South Africa. I mean, we have seen a number of reforms that have come through in the last few years. We saw the Spectrum audit, which finally, not audit, the auction, which finally happened. We're seeing Transnet, the new CEO, Michelle Phillips, is starting to get things moving in the right direction. So things are starting to happen, and we need to start seeing that translate into higher GDP growth for South Africa. And also, if we can get economic policy stability, which I think we will have now, and confidence can return to the market, and more people will be more comfortable to invest in South Africa, that will also kind of start the snowball, and the end result is high economic growth, which is really what the market is trying to price in at this point.
All right. Well, gents, quite a number of updates came out today. And actually, so there's a question here on NAAC and Sasol. I think I'll start off with NAAC. Would your panel be optimistic about NAAC's positive update today? Room for the share to go higher after today's 20-odd% rise. Yeah, up more than 23% actually by the end of the day. Not too much color, but of course, maybe what markets are holding on to was the fact that they will be swinging from a headline loss per share to a headline earnings per share. Zwelakhe, what did you make of this kind of thin update that markets seem to have held on to?
Zanati, I don't think this is a kind of stock that I like quite a lot. So first of all, I think it is a recovery after what was a bad result, and I think the market had priced in quite a significant downside after the losses that came through. And the fact that they are turning into a profit again is actually quite a big positive for the stock. But certainly not a stock that I like, not a stock that I believe has the attribute of being a quality business.
Yeah, I think there's really this narrative also coming from investors that obviously know NAAC from back in the day of once bitten, twice shy. and obviously now with the stock not being the blue chip stock that it used to be. Mark, I mean, do you think that this is a turning of the ship in any way?
Well, I must say the trading update was really quite positive. So I saw headline earnings per share of 30 Rand a share, which for half year, which, I mean, we will need to unpack that when they report. It sounds really quite good. I know that even post the recapitalization, they still have debt that they need to pay down. But yeah, I mean, it does look interesting. This could be kind of a recovery play. I don't know if we're going to see decades of growth out of NAAC, but certainly it looks like whatever they've been able to do in the first 6 months has been really positive. So I would like to wait to see the presentation though and see exactly how they managed to do it.
Okay, so just sticking with you, Mark. So you just like to see the results before maybe trying to nibble at this point?
Yeah, I mean, I think at this point it would be quite a speculative buy. I mean, it looks good on what we read today. So yeah, maybe if you want to, you can nibble a little bit, but it's very speculative at this point. Like to see what the balance sheet looks like and what the assets look like going forward.
All right. Well, let's go into Sasol. What impact would the case that Sasol won against Transnet have on the share price going forward, if at all? I did see that the share did gain today, but I wasn't sure if it was because of that announcement of the ruling of the damages that Transnet would have to pay to Sasol. Zwelakhe, do you think that this does have an impact on the share price?
Look, I think it had a positive impact already today. I think the reason being that they've been awarded a 6 billion rand amount that by the court that Transnet has to pay for overcharging Sasol on the transportation of crude oil for a number of years. But I think that's a once-off situation. I think the real issues remain around Sasol's how Sasol's going to improve their business model so that there's less emissions. The issue of being a chemical business when the price of crude is high, the feedstock becomes more expensive in the chemicals business, and certainly the execution is going to be a big issue. So I think it's a good story. It's a positive thing that gave investors something to be excited about today, but I don't think it's a long-term lasting factor.
Yeah, I mean, also why I was asking if today's share gain is because of this, because Sasol has actually been rallying over the last few days, also with the rest of the JSE. Mark, do you think that this is just short-term momentum and that there's caution to be applied here?
Yeah, I mean, I think that, so just on today's announcement, I mean, that was a high court ruling. So, I mean, I imagine Transnet will appeal. But, maybe longer term, the kind of settlement could be that Transnet provides services to Sasol at a discounted rate for a number of years. I mean, that would be a positive resolution to the situation. I think that Sasol at this point, a lot of people look at the company and say, if you break it into the sum of its parts, it is cheap. It is making nice rand cash flows with the high oil price at this point. But for us, I mean, I'd like to see chemical prices start to recover more. I mean, they need to start making dollar earnings out of their cracker in the United States. They've got a large US dollar debt, which if that cracker pays down that debt, then Sasol is going to be a good buy. But at this point, chemical prices are very depressed. So you're using your rand earnings to try and pay down your dollar debt, which is not a great situation to be in.
All right. Well, let's get into questions on the platinum miners. So this one is on the 4 platinum miners, Amplats, Sibanye, and Northern. Which of the 4 main platinum miners does the panel believe are currently at or close to a good entry point, and which companies would be recommended at current prices to take a long-term position on platinum miners? Firstly, Zwelakhe, would you be taking a position in platinum miners to begin with?
I would. but I'd be very cautious. I mean, I'd probably go with Amplats and Northern, and Impala has improved to some extent, but I think there's still a bit of risk in the sector in that their main source of demand for PGMs, which is the auto industry, is being challenged now. In the combustion engines are being challenged by electric vehicles, and volumes may remain subdued for the internal combustion engines, and it might leave us with a situation where we don't see the same high as what we saw, say, in 2019, 2020 in the PGM space. So I'd still go on the basis of the low cost of production, and I'd go with the Amplats and Northern.
Okay. And both Northern and Amplats are the lowest cost platinum miners here.
Yeah, compared to, I mean, Sibanye, Impala has some elements of, as I said, it has improved, but the big no for me would be Sibanye. They've got lots of problems, execution risk. They've got high cost of production. They blend between gold and PGMs, and they're not doing any very well. They've already gone into a new metals where the capex is heavy, and they've got into debt from being cash flush. The other players are not, and so certainly for me, the big no would be Sibanye, and I'd be more open to the other PGM miners.
All right. On your side, Mark, Amplats, Sibanye, Northern, which would you be picking there, if you are picking?
Yeah, so I mean, of the four, I would choose Northern. They still have a growing production profile, which helps with cost per ounce. They also, their balance sheet is in good health. Yeah, I mean, Sibanye's got the weakest balance sheet. PGM prices are very depressed at this point. It's not clear to me as to what will get platinum and palladium prices going again. So yeah, of the four, I would pick Northern, but I'm not particularly bullish on the sector.
There's also the second part of that question. Do you have any view on the medium to long-term platinum price trend? And for how long would one need to hold these miners to see a meaningful increase in earnings? I don't know how far your crystal ball can see, but Mark, let's give it a go.
Yeah, sure. So, well, I mean, I think that the platinum price can end the year sort of above $1,000 an ounce. It's currently at like 980, so I guess that's not a particularly exciting prediction. The more medium term, I mean, we've seen a lot of supply and demand projections that come out of the auto catalyst manufacturers saying that the metal is in deficit, so there's more demand than supply. What's interesting is that the platinum price doesn't show that to be the case at the moment. So I think that PGM prices are going to remain depressed for a bit longer. I think there's going to be a better entry point into the PGM miners. Yeah, and I mean, the PGM prices have to go up at least 20% to even justify the current prices for that you're paying for the equity. So there's time to wait, in my view.
All right. Anything to add there, Zwelakhe, on the medium to long-term platinum price trend, and also how long you would need to hold these miners to actually see meaningful earnings?
Yeah, I think, I mean, on how long, my thinking is that until we start to see the effects of retrenchments that were announced, I think late last year, beginning of this year, by the sector, such that those retrenchments take out volumes of production out of the market, I don't think we'll see that deficit being as critical as it should be for the prices to move significantly higher. So I think it is important to highlight that what's going to move the price going forward, in my view, is that it is going to be the supply side discipline rather than demand. So demand may be subdued because, as I said, electric vehicles, but in the short term, you're probably going to go sideways, and you probably start getting direction in the next 6 to 12 months.
All right. Well, zooming into Amplats, Following the BHP offer for Anglo assets, please can the panel explain just exactly what is meant by the unbundling of Amplats shares? I currently have Amplats in my portfolio, buying most of the recent dips. I want to get more Amplats when the stock dips, but is it wise considering this unbundling narrative? So just an explanation of the unbundling and I guess the impact for someone who is holding Amplats. Mark?
Yes, so well, unbundling is they're going to move Amplats into its own listing on the JSE. It's currently owned 80% by Anglo American, so that 80% shareholding is going to come to market. And the reason why the stock typically goes down on news like that is because there's going to be a lot more shares which have to come to market, and someone has to buy them because Anglo American is going to be selling. I mean, that is kind of the current view as to how the unbundling will take place. There are other ways that they can do it, but that's probably the most likely way. So it remains as its own listed entity, but a lot more shares coming to market for someone to buy. And then you have to look at kind of what size it will be in which index, because index tracking funds will take up those shares. But net there probably will be a bit of pressure on the share price. There's also probably another consideration is that currently Anglo American will set the dividend policy for Amplats. So we've always seen great dividend returns out of Amplats. When they've got cash, they tend to pay it. Whereas if it's a standalone entity, now you would consider, maybe they're going to reinvest that cash. Maybe the dividend payout strategy is going to change. That's a consideration. Probably the last thing to say is that typically when a company gets spun out of another company, on average, it's a good time to buy it because management become very focused on their own entity. There's kind of no longer a place to hide. I mean, their results are their results. They have to own them. And on average, it is actually a good thing to own companies that have been spun out if you look over history. So those are all my thoughts on the matter.
Zwelakhe, is the nervousness, because of all these shares that are going to be coming to market, is the nervousness that there won't be anyone to buy them? Zwelakhe?
Look, I think initially, as Mark says, I mean, initially there's going to be a lot of pressure because there are some jurisdictional considerations that the international investors who are major shareholders in Anglo American, that they would consider that it's operating in South Africa, it's a single commodity, and there's already other players in the market that they could have bought if they were interested in the PGMs. So I think you're likely to see that on unbundling, the guys will dump the stock, and then you'll start seeing a gradual buy on the basis of fundamentals, probably once the dust has settled. So in the beginning, it's going to be tough, but that might be an opportunity to pick it up. But the longer term, the fundamentals would have to drive the price again.
Well, that's the thing. When would be the a good time to pick it up, before the unbundling or after? Because as the viewer is saying that he's been plowing more and more into Amplats with these dips, but should he still, find opportunity in these dips right now, or maybe wait until the actual unbundling happens, Mark?
I would probably say that, I mean, if you have it, hold on to it, but then buy the dips when the unbundling happens. So you could basically just top up your position depending on what you want. But the ultimate thing is that it's dependent on your view on the PGMs. As I said, I'm a bit more constructive going forward, more on the supply side. And certainly, if that is a view that is shared by the viewer, I would say that when the dip comes, they probably top up. But if I'm not in it today, I would actually wait for the unbundling and basically go into it then.
Okay. Mark, on your side?
Yeah, I think if you can wait, I would wait. I mean, like I said earlier, I'm not particularly excited about the PGM sector at the moment, so I would wait.
All right. There is lots of question on lots of stocks here. The industrials. Is there an upside expected for the likes of Supergroup, Barloworld, and Bidvest? Yeah, Zwelakhe, I don't know if you want to maybe tackle all of them or one of them. Supergroup, Barloworld, Bidvest.
Out of the three, I'd probably say I prefer Bidvest, mainly because it's a very solid business, well run. It's got less cyclicality embedded into it. And if I look forward under the GNU potential, we could see some construction activity. We could see some a bit of infrastructure development. That would be supportive for Barloworld through their Caterpillar partnership. If I look at Supergroup, I'd say you probably have to look at what is happening in Australia in terms of the business going forward. The SA business looks very cheap, but the Australian business is a bit over the top in terms of valuation. So it's a balancing act. It's probably the one I'd be more neutral, but I'd be more in favor of Bidvest, and then secondly Barloworld, and then I'd go Supergroup.
All right. Mark, what would you make of upside potential for Supergroup, Barloworld, and Bidvest?
Yeah, I mean, they're quite different companies. Bidvest is a large industrial. It's got exposure South Africa and UK mainly. And I think that, it's a stock that's going to do well if South African macro picks up. It's not the best kind of valuation to buy it at because it's already had quite a strong run. But I mean, Bidvest is good if you're bullish on South Africa's prospects, and also that they've got a really good corporate finance team, and they find small bolt-on acquisitions, and they've done very well out of that in the past. Supergroup, I think you at this price you're probably getting a better deal. I think that the business is cheap at the moment. I think that again, if SA macro improves, I think that the business will do well, and I think your investment will do well. Of the three, Barloworld is my least preferred. So they do have the franchise for Caterpillar sales. They're under cautionary. So we're not sure if someone's going to try and buy Barloworld out, or if Barloworld themselves are going to make an acquisition. So of the three, Barloworld's one that I wouldn't invest in at the moment.
Yeah, all right. Let's get to your stock picks for today, gents. Zwelakhe, what are you picking?
I'm going with Taiwan Semiconductors. It's in essence a foundry, the manufacturer of the semiconductor products on behalf of all these players like NVIDIA. We've seen a cycle where these AI chips have been designed by the likes of NVIDIA. They now need to go through the factory to be produced so that they land on the data centers where they're needed and used. So I would probably say that it gives you access to that rally without having to pay 70 times like in NVIDIA. It is a lower return relative to NVIDIA, but certainly a very good business that has scale, and I think it's trading at about 23, 24 times 2026 earnings.
All right. Mark, where are you finding opportunity today?
Yes, so I'm buying PEP today, PPH, Pepco Holdings. So I'm looking to add exposure to my SA Inc. basket, and PEP hasn't had the rally that some of the other retailers have had. PEP's up sort of 5% over the last 3 months, whereas Foschini Group's over 25%. The reason why PEP is lagging is because there's a 30% shareholding that Steinhoff still has, which has to come to market. They're going to place it like we saw Momentum. Some of the shares were placed yesterday. Sorry, I've lost my view. Yeah, there we go. So a lot of fund managers are waiting for that opportunity to increase their stake in PEP. But I think at this price, you can go ahead and buy it now. We think that they've got a great South African business. We think that the Brazilian acquisition and the Brazilian business, they're rolling out 50 stores a year. We think that there's a nice growth opportunity there. You're getting a 3.5% dividend yield, and your earnings will grow double digits over the medium term. So I think it's a great buy at this price, and you don't have to wait for the placement.
All right. Well, thank you so much for your time and for your analysis today, gents. That's all for tonight's Stock Watch. Thanks to our guests, Zwelakhe Mnguni from Benguela Global Fund Managers and Mark du Toit from Oyster Catcher Investments. Up next, The Close. Stay with us.